All right, welcome to the webinar. This is a Nadex application and strategy webinar series. My name is Daryl Martin. I'm with ApexInvesting.com. And before we get started, first thing we always do is put up the standard disclosures. Obviously, trading involves risk. Make sure you know what you're doing before you do it with live money. And these are concepts taught, exclusively by Apex Investing. And then, of course, the standard futures, options, and swaps trading disclosure, which the nice thing about the Nadex one is it does not state that you can lose more than what you put into your account. So, which is pretty sweet. It's capped risk, and I know that sounds sort of odd to say, but if you're trading futures or Forex or even stocks on margin, you actually, depending upon the strategy you're using, especially on options depending on the strategy, but on futures and Forex, you can lose more than what's in your account. So having that capped risk is one of my favorite reasons why I like to trade Nadex. And some of you are new, or maybe you're advanced and you're learning, growing, figuring things out. I encourage you to go ahead and check out our website over at ApexInvesting.com, and just click right there to get free access. There's a trading forum, and there's trading tools that you'll be able to get access to for free, like our scanner and stuff like that. And you also get access to the deviation levels that we talk about in some of the webinars. And there's about 200 hours, I think, now of video on various trading strategies that you can get access to. And once you click on that and you signed up, then you just log in. And once you log in, you'll see the forums right up here at the top. So, trading question forum. And you can post questions you have. If you don't know where to post them, then you can just post them under the general forum. But, like sanity of psychology, money management, trading schedule, like what can I trade when, what instrument should I trade, like learning about trading from other traders, what kind of computer setup, internet software, things like that should I have, what strategy do I want to use, like tonight we're going to talk about trend trading premium collection, what system am I going to use, what's going to be my rules for entry, exit, stop loss, things like that. Style, and that's just how to read the markets. And then scan, basically making that final selection of what contract you're going to choose. That's like using the scanner to help you out with that. And then synchronize, putting it all together, and then going back and looking at what you did, what you do right, what you do wrong, and what do you want to repeat, and what do you want to make sure you don't repeat. And also, what did you learn today? Maybe there's something new that you learned, and just making sure you log that every day in your trading journal. And that's the basic concept right there behind the forum. You'll also, like I said, you can check out the scanners. There's tutorials on it, how to use it, and everything else. Okay? Let's see here. If I want to post a question, can you show me how to post a question? Yeah, just let's say you go over, I'll just put it, I'll show you an example just in a general trading forum. And, I just hit post new thread. So you saw that right there. So post new thread. And then I'll just put the title of my topic. And then I'll put, whatever the question is. And hit submit. That's pretty much it. You can, include links, you can include images, things like that, like if you're asking a question about a chart or whatever. You can also look at other ones about how to get, information. And, new trader using Nadex. So you can click on that. You go to here, you can reply to the thread. You can go to the next page on the thread, things like that. So just a pretty standard form. Now, of course, some of you said you don't even have a Nadex account or you don't have a demo account yet. So go to Nadex.com. And under trading, demo trading account, you literally can do this right now so you can follow along. It takes about 15 seconds, okay? Fill in your username, your first name, your last name, your phone number, your email address. Click apply for demo. And then they're going to send you an email, and within a few seconds, you'll get an email with a password in it. And what I usually recommend that people do is they go ahead and they, maybe go in and update it to a secure email or a password that they'll remember, because you'll probably forget, what that password is. And then when you're ready for a live account, or if you want to get that demo account extended, then click on Create Account. It's only $100 to fund an account. You can go from start to funded in about as little as 5 minutes. Obviously some people deposit a lot more than 100, but that's just so you know that's the minimum deposit. And it's just a deposit. Okay, there's no fee for having an account. And if you fund an account, if you place a trade, whether it be 100 contracts for $50 or one contract for $3, once you place your first trade, live trade, you can call up Nadex and they'll extend out your demo for a year. So if you want to know how to get your demo extended, that is how to do it. All right, any questions there? Just want to make sure y'all definitely know how to get that and get access to that basic information right there on Nadex so you can get your demo account set up. Awesome. Okay, well, let's go ahead and move forward into the topic of the night. Like I said, I will do an overview, but also show you where to get basics here. Tonight, we're going to talk about daytime and nighttime trend trading premium collection. So this is one of my favorite strategies to do on Nadex. You can do it pretty much every hour on Nadex, depending upon the instrument that you're trading. And we'll go into some of those instruments and different benefits and which ones to be looking for at certain times. Benefits of trend trading, premium collection. We'll talk about why would somebody want to do this, and some very important factors to consider whenever you're going to do a premium collection position. So there's some things that you really need to be aware of and think of in advance before you get in when you do the trade, because it's very easy to make a false assumption and not set yourself up for the best possible success. And then we may even get to do maybe an example or two of a trend trade. I have my charts up. If one pops up, I may interrupt the entire educational process and just go for it. Right now, we've been in a long on US yen. We've been in a short on euro dollar. So I don't really have a trade at the moment, but if I get another one, then we'll hop in there and do it. Okay. So with that being said, let's make sure that you do know where to get basics, because like I said, I'm about to go 100 miles an hour on you, diving into the good stuff. Okay. And so let me bring up the site here. And a question that I know is going to come up is, where can I get the recording? It'll be under Education Webinar Recordings, Bonus Webinars. Okay, this is where I'll post it up. Tonight, tomorrow morning, you'll be able to access it right there. Okay? And then another question is, where can I get some basic information on getting started on Nadex? Right here, again, under Education, Nadex Tutorials. Just go there, getting started with Nadex. Nadex platform tutorials, is how to use the platform, even how to use the mobile platform. I love using that. I place a good chunk of my trades on the mobile platform. Nadex spread tutorials. Tonight we're talking about Nadex binaries. They're completely different contracts. Okay, and then a few videos on contract specs and things like that as well to sort of get you up to speed. If you're like, what is an S&P E-mini? That's where you'll learn that, and sort of get you up to par on just some basic trader terminology and how things work. But that right there is going to include mostly your 101 videos, okay, getting you up to speed, step by step. And it'll introduce you to some advanced concepts. One thing I will caution you of is don't try to master 12 strategies. Pick one or two, get it down, add on to it, okay? I teach dozens of strategies, so I know over 70 option strategies. I don't do all 70 option strategies. I just know them because I've done them over the years through trading options and trading futures, trading Forex. And so I teach, about a dozen strategies that I will offer on consistently. But premium collection is something I can do every day, and you can do it consistently. So if you're looking for something you can consistently do, only spend, an hour, 2 hours at most trading, or you can obviously do it. You can spend 23 hours doing it if you want to. But this is something you can do pretty much around the clock, and you can start it on Sunday night and go all the way through Friday, afternoon. All right, so let's see here. What do we got going on? Half my trades and this webinar are over the phone. Yep, you can log on to go to webinar over the phone. So anyways, again, remember that's where the tutorials are. If you're new and you're feeling lost, stay on, just see what's going on, learn, post questions in the forum, okay? Don't be shy. One thing we really try to encourage people is, we were all new to this. We were all new to this recently, within the past at least few years, okay? So don't worry about asking what people often call a stupid question. Okay, it's just a question you don't know the answer to, and you can spend 2 hours searching for it, or you can just ask. And sometimes we'll just point you right to where the question is. Sometimes we'll answer it for you. But either way, we're going to get you the answer to the question. And that's that socialized part of the forum. It's learn to ask questions. So I'd rather find the right answer and be right, not waste time, so I can get to trading versus make a false assumption or waste time because I'm too afraid to ask a question. All right, so let's get into just a quick run through basics on binaries. Make sure everybody has that down. And I'll start with this on the platform, and then we'll also look over on the scanner as well to show you how to make this a little bit easier. And on the platform, when you log in, you're going to see on the left side, you're going to have what they call bullish spreads. They're not really bullish. They're Nadex spreads. They're bullish if you buy them. They're bearish if you sell them. So just act like that word bull doesn't exist, and it'll save you a lot of confusion. But we're going to be looking at binaries. And I'll go into the basics of binaries, then we'll talk about some markets and some times you want to trade them, different ones. And hopefully get your question answered as we go. And don't be afraid to post questions, and don't get upset if I don't answer immediately, but I will go back. I will answer every question before the webinar is over, okay? But I'll try to answer them as they come in if they apply. And if they don't, that's okay. If you have a thought that comes through your head, you want to ask it, just ask it, and I'll come back and get it, okay? So on Forex binaries, and here's the reason I'm looking at Forex binaries. The indices and the commodities do have binary contracts, but all of them expire tomorrow. Okay, so even the Nikkei does have some that will start up later tonight, but beyond that, everything's going to be tonight. So if you're a nighttime trader, remember we taught a day and nighttime premium collection, you're going to be focusing on the FX. The FX binaries have 7 o'clock, 11 o'clock, 3 a.m., 7 a.m., 11 a.m., 3 p.m. expirations. All the FX pairs have expirations every hour from like 10 a.m. to 3. And then 2 of them, in specific for the nighttime traders, have expirations at every single hour, basically. US yen and euro dollar has expirations on their intradays. Now remember, they also have that 7 p.m. Now 7 p.m. doesn't have an expiration on Sunday, but it does because it's a weekly contract or a daily contract. But it does. There's a 7 p.m. on Monday through I guess Thursday, and then there's hour like 8 p.m., 9 p.m., 10 p.m., 11 p.m., 12 a.m., 1, 2, 3, 4, 5 p.m. So I mean, they almost every single hour of the day there is a possibility to trade there. You don't need to necessarily limit yourself just to the U.S. yen, but at night, that's pretty much what you're trading. You're trading the FX pairs, and don't forget again that the other FX pairs have expirations at 11. Sometimes people get so into trading U.S. yen that they forget, oh, wait a minute, it's 7 o'clock coming up or 11 o'clock coming up. There's about to be an expiration, and they don't take advantage of that. So, you can look at those other FX pairs and see if, a signal comes up for you where you want to trade it. Okay? And let's see here. Okay. We'll talk about charts here in a minute. That's a great question. I'll actually show you how to get free charts. So, and there's a certain type of chart, you're going to want to use. You're going to need to get real underlying data, and I'll go into that because you're going to need to get volume, and you don't want to have gaps in your data, and there's a lot of reasons. But I'll go into how to get access to that for free, okay? But right now, let's hop over to, we'll just say U.S. yen, and we can do U.S. yen or euro dollar, whatever. And then we can choose an expiration, okay? So see, we got 8, 9, all these different expirations right here. Now, if you're using the platform and not the scanner, you do need to remember to refresh this basically every hour. You got to hit refresh, or the old ones won't drop off and the new ones won't come on. And so you won't know that you have new expirations. Okay? So like at 8 o'clock, there's going to be an 8 to 10. And the 8 p.m. is going to be expired. But you won't see the 10 if you don't hit refresh. So really important that you do hit refresh right there. Okay? And then all you got to do to see the binaries available during that hour are click on the different expiration hours, and it'll show you all the different contracts. Obviously, that can be a little bit overwhelming, and I'll show you how to make that a lot simpler here in just a moment. So for now, I'm just going to choose, just to make it easy, okay? I'm going to choose the 11 o'clock contracts. And 11 p.m. expiration is what I'm on, and I'll zoom in on my chart a little bit, and we'll just do a very basic, quick run-through of binaries. On a binary, the price if you're buying the contract, you're saying, and this is the most basic definition, Nadex is more than this definition, but the most basic definition of binary is a true or false statement. Okay? And as a trader, you don't want to rely simply on that true or false statement, and we'll go into that. But the most basic definition when you buy a binary is you're saying that the statement is true, that the US yen will expire at 11 o'clock at a price greater than 101.2. Okay? So again, it'll expire greater than 101.2. If you sell it, you're saying it'll expire at or less than 101.2. So when I say it, again, I mean US yen will expire, at or less than a certain price or at or greater than a certain price. So I'm actually looking at a FX spot chart to make this determination. So this is what I'd be looking at to determine, trend direction. All right, so, we got signal comes up, post 6 o'clock when the market's open. I'm expecting it to expire above 101 point, in this case, 09. But, and I'll go into that a little bit more in detail for you here in a minute. But I just want you to first understand the concept. If you say buy, you're saying the statement is true as if you held. You don't have to. I don't suggest you do. But if you held, you're saying the statement is true that if you buy the contract, it will expire greater than that price. If you sell the contract, it'll expire less than or, and this is important, equal to. Because if the statement is false, that it won't be greater than, then equal to counts. Right? So if the market expired at 101.19, would a person who bought the contract win, or would be profitable, or would a person who sold the contract be profitable? Who would be profitable if the US yen spot FX expired at 101.19? Person that sold, exactly. So perfect. Yeah, Chad, Erica, awesome. And Samuel, exactly. So the person who sold. So less than. Now, again, on Nadex, I want to point this out. Do you have to wait till expiration? So no. So I can open a contract. I can place the order. Add a size there. Add a contract. I can place the order. And then it'll show up in my open position. And then I could set a take profit. I bought it for $23.50. I could sell it, say, $23.50 higher. So I could sell it at $46.50. $23.50 times 2. And then hit place order. The market goes up pretty much to about 101.4. Then I'd be profitable on that trade. Okay, so just hit place order on there. And now what's going to happen is, and notice I just hit that little green arrow right next to it. It'll show up in my working orders. Okay, so a lot of people wonder, why are my orders going into working orders? Well, it's because I'm trying to sell higher than the bid, the left side. Or I'm trying to buy lower than the ask side. Because every order you do on Nadex is a limit order, which means I want this price or better. The lowest I'm going to pay is, if I say, $20, then my order is going to go into working order. If I say the least I'm willing to accept is $46.50. Again, this is just a demo account. Don't be doing this trade. But the least I'm willing to accept is $46.50. Then it won't fill me until the market has got up to a price where that binary is at that price. Okay, we'll talk about actually what moves that price here in a minute. So now let's talk about risk reward. Understand, buy means you think it's going to go up, but you don't have to hold it. You can get out. Sell means you think it's going to go down, but again, you don't have to hold it. You can buy it back. I highly recommend that you don't hold till expiration, because I have seen many a times trades get to $92, $94 and go all the way back to zero. Okay? And you don't want that to happen to you. So take profit. Don't be greedy. Don't worry about, you're up. You need to worry about the last few bucks. And then the next thing, let's go into just risk reward on buys. So if I buy the offer price at the price it's showing on the buy side, that's my risk. So if I'm risking $22, if the price is 22, I'm risking 22. The maximum value of a binary contract is $100. Now, I don't just have to do one. I could do 100. I could do 50. I could do, whatever. I don't like to outtrade the market, so, we're doing, less volatile times right now. But, I can do as many contracts as I want up to whatever exchange limits there are, which are really high. You probably don't need to worry about it. But, the biggest thing is, I just want you to understand, the risk is whatever the ask side says. So the offer side, the right side. And since the max value is 100, then the most I can make is the difference between the two. Okay? So $100 minus, now it's 23. So minus 23. And let me take a snapshot so this thing doesn't keep changing on us. Hold on. Update it, and then I'll do a snapshot on here. There we go, and then grab it. Okay, got it. Okay, makes it a lot easier. So the most I'm going to risk on this thing is $22. It doesn't matter how far the US yen goes against me, my risk will not exceed 22. And unless I elect to get out, I will not be stopped out of the trade, which means it could go against me by 100 pips. If it came back, I could be profitable on the trade. It could go against me by 30 pips. If it came back, I could be profitable on the trade. Okay? I'm not saying that's always what you should do. It all depends upon the type of strategy you're using, but just so you understand that it does, like, it's not like you're out of the trade if it goes down. Okay? You actually have all the way until that contract expires before the trade would be over. Now, the next thing is just understanding that profit right there. So the most I can lose on the trade is 22. The most I can make on the trade is 78. That's 100 minus 22. You'll notice that the profit and loss numbers right here always add up to 100 times the number of contracts. So if you put 10, it'd say 220 and 780. Okay? But they do the math for you. It's there. You just have to open a ticket and put in a quantity, or you can do it in your head by looking at it, or you can use a scanner and it does all of it for you anyway. And it does it all for all contracts live at the same time. And then you'll see like this, what's this market selling for? That means the lowest the value of the binary can go is 0. The highest it can go is 100. Okay? Does anybody have any question about just, max risk, max profit on a binary contract? We did get a question, what's a good profit to take if you don't hold the binary to the end? It really matters on what strategy you're using, Chad. If I'm targeting a strike, like an out of the money, I'm going to get out usually at 43. Like if I buy at 22, I'll sell at 43. If I sell at, say, 78, I'll buy back at 57. If I'm buying, a higher price binary, maybe I'm buying a, $75 binary, I'll sell out of it, somewhere between 92 and 96 most of the time. So, the biggest thing I look at when I'm trying to determine that is I actually look at what the price ladder is saying. So this is actually a really good tip for you on trading, okay? If you go in, and let's say you did buy this contract, okay? We bought it earlier. Let's say we bought it at, 22. And what's going to happen is the market's going to move up, okay? So you could actually look at this price ladder moving up. And I go, well, what is the deepest out of the money? We got 95, okay? So I could wait till 95. But if I got out at 91.50, or 89.50, or whatever, then that's 10 less ticks the market has to move, and I get out of the trade, and my profitable trade doesn't become a losing trade. Okay? So basically what I'm saying right there is just I look at the price ladder to determine where I'm going to get out if I'm doing like an out of the money contract. And I go, what's the best price? Because I would rather get out at 90 than wait 10 more ticks and get out at 95. And I'll watch. I'll put the trade in there at 90, but as time goes on, as we get closer to 11, I might move that to 92 or 93 or whatever. But I'll initially set it like right at 90. And it's not a stop order. Nash asked, so do you set stops at 43.57? No, it's not a stop order. It's a limit order. So we're talking about take profit. So a limit order is going to be a sell higher than where the market is or buy lower than where the market is. Okay? So that's buying and setting a take profit. And so, but as far as what price to take profit on, it really means so as far as again setting a take profit, it's not really it's what strategy you're doing for what take profit you should do. So if I'm doing strangles on news, I'll use one take profit strategy. If I'm targeting a strike on out of the money, I'll use a different strategy. If I'm doing premium collection, I'll use a different strategy. So tonight we'll be talking about premium collection. And on premium collection, I'll be looking to sell, like at this closest, price here I can get, like 89, 95, whatever. On the sell side, now this can get confusing at first, but if you'll let your mind just soak it in, okay, if you're new, if I sell at $88, I want to buy back lower. So I could buy it, say 25 and sell at 88. Or I could sell something else at 88 and buy back at 24. Okay, so I can sell, but in all scenarios, in every scenario, I always want to, ideally, I want to be buying lower than I'm selling. I want to be selling higher than I'm buying. Okay? And the reason I bring that up, and I know it sounds so obvious, is sometimes people are starting to, they're getting down the profits and the risk, and they're like, okay, this is $10 risk, and they'll put in a buy at 24 and a sell at 10 because they're going to, and they're like, oh, wait a minute, I should have sold at 90, and they get a little bit confused. So just make sure that when you're setting a take profit, if you're wanting to set a take profit, that you do set the sell higher than your buy, or if you're setting a take profit on a sell, make sure you set the buyback price lower than your sell. I know it's basic, but just want to reinforce some of those little things that have gotten all of us at one point or another. Okay, so now if I sell, so we got the buy side, the price is the risk, and the difference is the profit. If I sell, let's say I went over here and sold this contract for $88, which means I think the market's going to be, at least going to move down, or, again, at the most basic element, if I wasn't going to get out, which I will, but if I wasn't going to get out, then I'm saying it's going to expire below 100.8. Oh, so 100.80 at 11 p.m. Eastern Time. And all times on Nadex are Eastern Time. I suggest, it's up to you, I don't live in the Eastern Time zone, but I suggest that you set your computer clock to Eastern Time and make sure your charts are all Eastern Time, because it makes life a lot easier. You make a lot less mistakes. And I'm sharing that from you from my own experience of making mistakes by mixing up time zones. Okay, so if I go in and sell for 87, and then I can place an order to buy back lower. But if I sell for 87, remember how when I said when I buy for 20 or whatever, my risk is 20, my profit's say 80. Well, if I sell for 87, my profit is 87. My risk is the difference between $100 and that. So 100 minus 87 would give me, basically a $13 risk on the trade. So it's the flip. Okay? So on the buy side, it's quoting your risk. On the sell side for entry, it's quoting your max profit potential. Okay? And they'll always add up to a net, 100, whatever it is. So if I hit sell, 88 plus 12 is $100. So again, I can get in, I can get out. Any questions on just the basics of max loss, max profit on a buy or a sell, or setting a take profit order in general? If we don't have any, I'll keep going. Okay, so no questions, everybody got it? Sweet. All right, so what I'm going to talk to you about today specifically, okay, is the fact that as a binary trader, as a trader period, you're very trained naturally to go for the high payout trades. I could buy for $5, I can make 95, man, get me in. I can buy for 7 and make 93, I'm all about that, okay? The problem is, what you don't realize is that there's a reason that it's $7 risk. Okay? That price is a reflection of probability that it's going to expire in the money. Now again, this is your edge on exiting early, so you don't have to play that complete probability. You can actually increase it just by it moving up. But if I go in and I buy these contracts, I'm lowering my probability of profit because the market has to, and this is the key, okay, has to move up to these strikes. And so to show you what I mean, I'm just going to open up a ticket right here, and we're going to look at pretty much the Nadex indicative price, which is right around 100.17. It's pretty much where the spot FX is as well. Okay? And so is this contract above or below the current market price? Right, it's above it. So does the market have to move up for this trade to become profitable? Right, it has to move up for it to become profitable. Now, it doesn't necessarily have to move up to 100.6, 100.61. Now, at expiration, it would have to be at basically 100.61 to be profitable. Okay? But looking at that contract, understanding that basic concept, okay, it has to move up. If it stays flat, if it goes sideways, if it goes down, and it doesn't move up far enough by expiration, the trade will lose. It could lose some of the profit if you got out early, or it could lose, or not some of the profit, some of the risk if you got out early, or it could lose all the risk. Now, again, the nice thing is it's only $9 risk. But be careful as a trader saying, it's only $9. Treat your money wisely. It is real money. Once you get to a live account, it is real money. And I didn't even say treat the demo wisely. Go in there and make some mistakes, do some things, whatever. But the more you treat demo like you're going to treat live, the better you'll be when you go live. Okay? And so put that contract on. If you do that, now here's what I want to talk to you about probability. That's basically saying that's a 9% probability of it expiring in the money. As of this moment, this second, if you bought the $9 contract every day, you'd basically lose 91 of them and probably profit on 9 if you held them to expiration. Now, that totally changes when you get out early, okay? But that's what that's telling you. So if you get out early, then if you buy at 9, sell at 18, stuff like that, then things, like I said, they change for you. But just trying to make sure you get the basic concept there. And that's what we're naturally drawn to. Now let's flip it around the other side. What if I bought this contract? 101 is the strike. The market's currently about 101.1819. Is this contract above or below the current market price? It's above it, okay? So it's already what we call in the money, meaning the statement is already accurate. So the buy side, it's already higher than it. Okay, if it's sell, I'd want it to be already lower than it. So if it's above it, then if the market goes up, do I profit on the trade? Let's say the market goes up and stays up, okay, or goes up and I take profit. Will I profit? What if the market just stays flat? What if the US yen just dies on the vine and absolutely nothing happens from now to 11? Will I be profitable on the trade? What if it goes down to 101.01? Will I be profitable? If it goes against me by basically 17 ticks. Now what if it goes down and expires at 101? What would happen? I'd lose, right? Because I bought it and I said it'll be greater than 101. So if it goes to 101, that'd be equal to 101. Now if it goes down to 101 and comes back up and I haven't exited, which we'll talk about those rules in a second, then that could work for me. But, so, do you see the thing here? We're going to talk about risk, because the first thing you look at is you're like, wait a minute, on that other trade, if I risk $20, I can make 80. On this one, I'm risking 80 to make 20. So we're going to talk about risk management here in a second. But the first thing I want you to see is the probability, okay? On that $20 one or whatever, the market, had to move up. On this contract, the market doesn't have to move up. It can move up. It can move down. We profit. On, say, this contract that's 26, the contract has to move up. What are my settings? Here, I'll show you this. Under settings, go to preferences. I don't know how that's got changed. Say allow multiple ticket panels. Hit set preferences. And that should allow you to open up more than one panel at a time. Okay. Let's see if that does it or not. If not, then just do this. We'll go tear off ticket. And then right here, tear this ticket off. All right. So, and I cover how to do this, by the way, in the basic platform webinar. If you're wondering how did I do that. But it's just that little icon right there. Okay, so buy, we'll click the price. By the way, if you try to buy at the sell, you're not going to get filled unless the market goes down. Okay? So if you want to get filled now, you want to buy on the right side. If you want to sell at the left side price. And you can just click it and it'll update it to the current price. Okay, so if we look at these two contracts, right now I'm basically risking, 70, $80 to make 20. On this one I'm risking basically, 24 to make 75 if I held both to expiration. Which one has a higher probability of being profitable? The 101.4 or the 101? Yeah, the 101. Because the market can stay flat, move up, or come against us, and we can still be potentially profitable on the trade. This is what premium collection's about. It's about stacking the odds of price movement in your favor. You can be wrong, or sometimes you're right, but it takes 2 hours, right? You're like, man, I knew that thing was going to move, but it moved right after your binary expired. We've all been there. You bought the 26, and then it shot up to like 101.80. But this one, market didn't move. You can still be profitable. Now, the problem is that your risk is higher on this trade, right? So we're risking like 81.50 over here. So since my risk is higher on this trade, I need to lower my risk because I don't want to lose 81 bucks and make 18. I need to be right at least 3 out of 4 times, and that's going to get pretty rough. That's going to be one bad day is going to equal a bad month or year, right? So let's talk a bit about what binary option pricing, like where does it come from? Do I have any option traders in here? Like people that have actually traded call and put options before? To see if we got anybody in here. So we got at least one of you. A couple more. All right. On option pricing, okay, this is actually, and some of you probably, if you are an option trader, you're trying to figure out where in the world the price of a binary comes from. Okay? If you're not, then you're just trying to figure out how to pick the right direction. And that's okay. You don't need to fully understand what I'm about to say, but I think this is really important for you option traders because it's a nagging question. There's a thing called Greeks, and we're not going to get all Greek on you, okay? But one of the most basic Greeks is called delta. And delta just means how much will the option change in price if the underlying market moves $1. Okay? So if you bought an 1730 call option on the S&P futures and the delta was say 60, then for that 1 point move on the S&P futures, that option would make 60 cents if the delta is 60. Okay? And that option delta can go up to 100 and down to 0. Does that sound familiar? 100 to 0? Okay? Yeah, deja vu. There you go. And at expiration, it has to be 100 or 0. Also sounds very familiar, right? So whether it's in the money or out of the money, which also sounds very familiar. And gamma is how much that delta changes. So the longer there is till a contract expires, the slower a binary price will change. So like right here, if we look at 1735, see how that 55 goes to 58? Okay, so 1735, 1730, okay, that delta increases by just a few dollars. Well, up here, let's look at 1730 and 1735. It goes from, it's already at 57 instead of 55, and it goes from 57 to 62. So it's like, it basically is moving $1 faster. This contract expires in 4 days. This contract expires in 18 days. Same thing happens on binaries. The longer there is till expiration, the slower the price is going to move. Okay, you want the price to move somewhat fast, so that way you can be profitable on the trade. You can take advantage of that price movement. Okay? All right, so the next step I want to go into with this is the delta of a call option with the same strike, and I know this is probably a little difficult to read, is the same as a binary's price. So if a delta is 60 on the 1730, let's look at the 1730.5 weekly expiration. They both expire at 4:15 this Friday. And look at the price there, 60 by 66. Okay? So the delta is actually of the call option at that same strike, at that same expiration time, is the same thing as a binary's price. A binary is the delta of a call strike. So if you're wondering where it comes from, that's where it comes from. If you have no idea what I'm talking about, you'll never need to know. Just know that it moves faster the closer you get to expiration. And therefore, you're probably going to want one that will get to 100 faster, especially if you're risking 80 and you're wanting to get out, okay, at 95 or whatever. You're going to want one that's going to move faster. So you don't want to choose one that's like 7 hours away for premium collection. One that's like in the next hour, 2 hours at most. Most of the time when I'm doing premium collection, we're talking anywhere from 5 minutes to 2 hours. Okay? And so that's a very advanced side note lesson for you. Okay? If you have more questions, post it in the forum. I'll be glad to help you out on that. So as time goes by, if nothing happens, this delta is going to get closer to 100. This binary is going to get closer to 100. And this one, as time goes by, if there's no market movement, is actually going to get closer to 0. The market's going to have to move for this price to go up. The market doesn't have to move for this. Time and direction are both in your favor on an in-the-money contract. And it's counterintuitive to trade the in-the-money contracts. Like it doesn't make sense. You're like, that's just way too much risk. But that is actually one of the reasons that we look at doing them. Because a lot of times what seems obvious is not always the best idea. Okay? All right. So, and you can see this one's going up and this one's going down. Okay, that was like at 80. Now it's at 87. This one was at 25 and now it's at 21. So, and sometimes even though the market increases because time has passed, this one will still go down because it has to move fast enough. So, in out of the monies, you've got to be right about direction and speed. Okay, on in the monies, you just need to be right about direction within a certain amount of time. But you don't even have to be right about direction. You could be wrong about it and still be profitable. It's just as long as you're not completely wrong. So how do we manage our risk on a trade? Let's see here. Let's put a trade on over here. I'm going to throw one up on... do one on euro dollar. Okay. So right here over on euro dollar, I'm going to look at the 8 o'clock, and I can look at the 9 o'clock. But doing this gets really tiresome, and then especially like when you have an 11 o'clock daily and 11 o'clock intraday, they really start stacking on top of each other. Okay? So I'm going to go over here, and I'm going to go, all right, I want to trade, this is the scanner. You can get access, there's videos in here, how to use the scanner and everything. Okay? But I'm going to choose either demo or live. So let's say I choose demo. And then I'm going to choose, let's make this really easy. In the money, within 2 hours or less till expiration. That's it. Okay? So 0 to 2 hours, in the money, and then I'm going to choose the market I'm looking at. So maybe say euro dollar, and I'll throw dollar yen up also. So I can actually look at 2 markets at once. And what it's going to do is instantly narrow down every contract that may qualify for my trade. Okay? And makes it very easy for me to see, is there even a decent contract? If there's not one, by the way, I don't force it. Okay? So here's a rule that I personally use. I don't buy a premium collection trade for more than 85. And I don't sell one for less than 15. Okay? So yeah, whether you're using trend or EPC, you could use these settings. I mean, the EPC, which is expiration premium collection, we're going to talk about that next week. But that's 0 to 15 minutes. But just to get them all on one screen so you can watch both at the same time, 0 to 120 minutes. In the money contracts, and then you can even choose direction. Now I have like a long right now on US yen. I got a potential short over here on the euro dollar, so I chose both. But if I was just choosing one or the other, I could actually choose direction also. So I can just say buy, and it'd show me just the buys. Okay? So again, I don't buy. Now I may go, this is an acceptable contract, but I'm only going to buy it for 85, and I may put my order in for 85 and let the market oscillate to fill it or not fill me. But I don't chase it. Okay? And then, so let's go down here. Let's see if we have a sell. Potential for euro dollar. 35.25. Okay, so that's really close what I'm looking for. So 35.24. Okay, right now I can get $26 on this. Now I have more time till expiration, right? I have an hour and 10 minutes. There's really nothing on the current one because time just evaporated too fast. And so I'm going to go in and I can grab how many ever contracts I want. So let's say I grab 10 contracts. Okay? 22 bucks. Remember I said the least I want to do is 15. Okay, so now I'm in that trade. There's two things I want to do. One is I'm going to go ahead and set a take profit because what if I'm right really quick and it goes in my direction? So I'm going to go over here, and you'll be down, by the way, the bid-ask spread immediately on a trade. Okay? And so don't worry about that. That's just normal. And I just did 10 contracts. That's why it's 75 bucks. And I'm going to go in, I'm going to put a buy to buy back at. And how do I find this out? Well, there's a couple ways. But one of them is I can go up here, and I could reset my filters if I want to. And just sort of see, remember that out of the money thing I was talking about earlier? I'm going to go for 92, not 95. Because the euro dollar would literally have to move, let's see here, what would that be? 10 more ticks for me to get a $95 fill. So, or if I'm buying back, I'll look at the other side. I'm going to go for 8 or 5. So, whether you're selling or buying, you can use the same trick. So on this one, what I would do is I'd go, okay, what would that be? 8 or 5? Okay, let's go for the 8 because I'm going to have to wait 10 more ticks. See, 1.3534. I'm going to have to wait 10 more ticks to make $3 more. I would rather get out of the trade, book the profit, and move on than wait 10 more ticks for $3 more. So if I sold it, now I want to buy it back lower. Okay, remember this buy back lower thing. Okay. And I'm going to go in and I'm going to do a buyback for 8. And then I'm going to hit a place order on the trade. Now you could go for 5 and I could watch it. Okay, if I start seeing that this is getting to 5, it's like, all right, I'll go ahead and, I'll do 5 now because the closer we get to expiration, the faster it's going to move. But I'll just hit place order on the trade. And now I'm going to have a working limit order on the euro dollar. Okay, sold it at 22. It's pretty much the same price. Now it's moving down. And then with the working buyback at, $8. So about $14. I'm usually looking for, honestly, about a $14, $15 profit. That's why I say I don't ever go for more than 85. When I do that, I'm basically making myself wait till expiration, which I don't like to do. So I really like around 20. But the lowest I will do is, the highest I will buy is 85. The lowest I will sell is 15. But I'd rather get it as close to 20 as I can. Okay? So now as the euro dollar moves down, and here I'll bring up a euro dollar chart for you so you can see sort of what I'm looking at. So I got a breakout right there. Said, hey, go short, sell the market. And I'm looking for a strike around 35.25. As the market goes down or stays flat, then that trade will eventually, hopefully, potentially profit. So yeah, so if I put up, if I went in and I sold for 22, it'd be $78 a contract, which means I put up 780. That's correct. And I'd profit, if the trade, max profit would be 220. I'm going on this trade for about 14, so about 140 bucks profit. Okay? Between now and 9 o'clock. Let's get rid of this out of the money trade. It was a bad idea anyway. We'll just exit. There we go. All right. Get that one off the sheet there. Cancel that. Okay. So now profit management's important. It's very important because it can help you avoid having a profitable trade turn into a losing trade. Okay? That was a 4-minute chart, Nash. What's more important is I need to have the reality that I'm going to lose. Okay? And no matter what my probabilities are, let's say I have an 80% probability or whatever, I got a 50-50 that the trade is going to be a profitable or not profitable trade. Okay? So, and that sounds weird, but 80%, let's say 80% of the historical accuracy, whatever, it works, all that stuff's great. But I got a 50-50. And this is probably, I mean, I sort of honestly hope this trade loses because I want to show you how to manage it. This is the most important part of doing premium collection, is risk management. Uh, I have to get out of the trade at a certain point. I do not want to lose all 78 bucks or 780 in this case, okay? As long as I will manage my risk, I can survive. If I don't manage my risk, and I know that number looks big because I do 10, and that's why I usually only do 1 because it flips people out. But as long as I'll manage my risk, the trade works. If I hold on to it, this thing can just go further and further and further against me. Okay? And I don't want it to 8 trades. I'm just going to let this thing go. Okay? Now, those of you who know me, all right, where would I get out of this trade? This is why this is important to do in demo. I want you to see it happen. So Jack, yeah, Greg, exactly. So at the strike, okay? So at the strike. So it's not simply, if I just put a $57 order in, if that was above the market, I would be out. And let's say like the market was at 40 and I put in a 57, it instantly filled me. Because if I said I'll buy at 50, let's say if I bought at 60 right now, well, I'm saying I'm not buying any higher than 60. I'll take 60 or lower. So you don't want to put the order in right away, okay? But you want to have the ticket up and ready and filled in on the trade. And so every second I'm waiting right now, this thing's like moving up, moving up, moving up, and it can get worse and worse and worse. And here's what's really bad for you as a trader, okay, is you can be... The worst thing that can happen to you as a trader is to do the wrong thing and it work. Because it encourages bad behavior. So you're like, well, I waited on that one, and I waited on the last 3, and they all came back in the money. That's great, but you know what? On the next, like, one that does it, it's going to wipe out 8 trades. Okay? So I need to have the discipline to be able to exit out of the trade. Which can be difficult. So you need to be a disciplined trader to be able to pull off this strategy. You need to be able to go, I'm willing to take the loss because I don't want to have 8 more profitable trades to make back, or 6 more or whatever profitable trades to make back that money. So you got to be willing to hop out of the trade, take the loss, get out of the trade, whatever you want to do. There's several different methods for risk management that you can use. The most basic method, okay, is going to be right when it hits the strike. That's the simplest, easiest, I'd say in most cases the best risk management plan because it keeps you very disciplined, okay? But now I'm going to add on, because I know we got some advanced traders. I recognize a lot of your names in here. I'm going to add on an advanced piece for you. Do trades move faster or slower the further they are from expiration? Slower. How far are we from expiration right now? We're an hour out. If this thing went in the money by a couple ticks and we had 10 minutes, this thing would go from like 50 to 80, right? With just a couple ticks of movement. It'd fly really, really fast, okay? Does everybody understand that? Like the closer you get to expiration, the faster that price moves. Okay? So, yeah, you got a solid hour on the trade. Holding on to it, you're still increasing your risk. Notice that risk going up. I should be out of the trade. I want you to feel some of the pain so you don't do this wrong. And I bet the trade ends up working out. But you leave the trade on here, you don't exit. It can just go further and further against you. And also, understand it moves slower, which the slower thing is actually in your favor. Because it's not going to go from 50 to 80 in 3 ticks. Okay? So, if you're an hour and a half out from expiration, you might have a little bit more, tolerance. But like what I use, I have what I call an offset line, and that's like my worst. This is the most aggressive strategy. I don't even teach this to most people, but just teaching you, my worst tolerance will be like 630 right here. If we got up to that, I'm definitely out. And I can actually see what the price would be if it went up to 1.630, within a fast move. So 1.3630. And what this will do for me is it'll show me the approximate value if the market ran up there. Am I typing that in right? Let's see here. Hold on. 530. It's like 100 does not make sense. Okay, so 530. There we go. That's a little better. Okay. So the contract we got into, which is the 3524 contract right here, okay, will basically be right about 71.50 at that price if it got up to my trailing stop line up here, okay? The only way I would consider ever having my strike, my exit, further than my actual strike, because I've had this question come up by some of the more advanced traders, that's why I'm bringing it up. The only reason I would actually do that is because I have at least an hour till expiration. So I'm like, you could say 45 minutes or greater. If you're at less than 45 minutes to expiration, under no circumstances would I consider holding on to the trade if it goes past my strike, if it goes up to 35.24. Okay? Because the price moves slower. So is that making any sense? Now, I am taking on additional risk, but I'm also counting on it moving slower. Which it does move slower. It doesn't go up to, $94. I wish I would have left up 8 p.m. because then you would have really saw how fast it moves. If we would have had that up at the same time. So there's basically, I'm teaching you 3 different levels of risk management. Okay, level 1 would be like having, like whatever your trolling method offset is. I use this little offset line. You can check it out on our website. Trolling method, no, that's the most aggressive method, but it's only for 45 minutes or greater. Okay, and be willing to take on more risk if you're going to do that. Okay. Trolling method 2 would be if it hits my strike. So my strike was 35.24. And I actually have a little adjustment to that as well. It's really simple. Is I actually make sure the Nadex indicative hits my strike. Because what will happen is the Nadex indicative is pretty cool. Is it uses the last 25 on Forex, the last 25 like quotes that weren't sequential, and it averages the middle 15, and that's what the indicative price is. So you can say it's a little bit delayed, but I think a better way to put it is actually it's a filter of just like fake price movement, like a little spike that goes up, there's not a lot of trades, and it comes back down. And so I'll use that, and that saved me a lot by using the Nadex indicative instead of just the price on my chart. So even though 35.24 on my chart may have got hit, maybe the Nadex indicative only got to 35.23. So there's a couple ways to get out when it hits your strike. The manual method would be to literally sit there and watch it, and then when it hits it, then you have your order filled in and ready. So let's say we had this filled in at, we'll just say 80, okay? Because when we're doing a limit order, so it's going to fill us, let's say the price is at 55, it's going to fill us right away. And it goes up there, comes on back, and then I'm just going to hit place order. And then it'll instantly fill me at the best quoted price. So let's say this price was at 55, and that was at 35.25, okay? Then I'll hit place order. And then instantly what it'll do for me is it'll submit the order at, say, 80, and it's at 57, and then I'll be out of the trade. So that's the manual way to do what's called a virtual trailing stop. Does that help, Sam? So there's a lot of different ways to do it. We have webinars on Thursday mornings where I go into other ways to do it, but that's just a couple examples. Okay? So that US yen, that took off. That one did great. So we just couldn't monitor all of them and talk at the same time. So it's been taken off. Didn't really look back either. But we had a strike on that one at 101.15. So now, does everybody get the idea, the concept of risk management, how it works? Okay. Like worst case, like most aggressive strategy would be having like say an offset maybe like 5 ticks above, okay, your strike, but only if you have 45 minutes or greater till expiration. Aggressive strategy would be getting out when it hits your strike. Now when I say aggressive, I mean because you're taking a little more risk, but you're giving yourself a little more room. And basically you're trying to figure out how to not get stopped out, but give yourself the most room. Now the most conservative strategy would be to trail your stop very fast. It would actually be hard to trail on this one now because the line flipped. But to trail your stop with this line right here. So, or whatever, maybe it's 5 ticks above the high of each bar. Okay? And by trailing that stop, you're lowering your risk. So maybe I said, okay, well now my stop's going to be, well, sort of, if it went down further, it'd be easier. But let's just say like the market was down here and I hadn't got out yet. Now my stop's going to be 35.20. So if it goes back to 35.20, I'm getting out. Okay? So I can move that down. And I had a trade we did on a webinar the other day where, like last Thursday morning, we were trailing the stop and we lost like $1 on the trade. Just by trailing our stop. And I'll look at things to, give me a heads up or a clue if I need to be really worried. Like that's why you'll see I'll have multiple time frames up. I'll have 1, 2, 3, 4 up. Because, one thing I was watching was that we didn't have anything else flip. So even though that thing was like oscillating back up, my one, had a short flip, but it didn't confirm. My 2 had a short flip. My 3 had a short flip. So nothing had flipped yet. So, I didn't really have any confirmation to worry about it at that point. Everything was telling me short except the 4 minute. So, now if these were starting to tell me short and then this told me short, then, or, if these were telling me long, and then this told me long, then I'd be worried. But basically we just had a big oscillation move right there. But no matter what your strategy is, whether you're using like the MVP strategy that I use, which is momentum volatility, or whether, you're using Bollinger Bands or moving averages or time and sells, and I've taught a lot of different methods. This is my favorite way to do it. Whatever method it is, you have to have a risk management plan, and you have to be consistent on that risk management plan. So that's why in my mind, I'm like, okay, if I got 45 minutes, I'll use my offset line. If I have less than 45 minutes, then I'm going to my strike. And if I see the 1, 2, 3, if I see those flipping on me, then I'm instantly going to go to that conservative. I'm going to tighten that thing up. Okay? So, I hope that wasn't too confusing. So I know there's a lot in that, but I'm just trying to get the concept of premium collection. Obviously, I don't expect you to master it in a 1-hour session, but just get the concept of it and how it works and what it is, and that the most important concept is you have to have risk management or you'll wipe out your account. Not necessarily your account, but you'll wipe out all your profitable trades. Because if you just hold that thing to expiration, whatever happens. That's the worst thing you can do. Okay, got a question over here. Let's see what we have. Yeah, and see, even this is flipping back down. So, and that's where I use confirmation of time frames, multi-time frame confirmation. And that's one of the few things that actually gave me confidence to stick with the offset line. Without that, I would have been out. But anyways, even if I would have lost, I would have liked to, like I said, I don't even mind a trade losing because I think it's important to show you how to take a loss too. Because that's more important than taking a profit. Anybody can take a profit. It's the disciplined traders that actually learn how to take losses. Would a good way to trade be on news events in short time frames? Yes, I do, Greg. I do trade news events on short time frames. I would never do. Well, I guess I actually do premium collection on them sometimes. But up here under news trading plan, I actually show you how I do that. So then there's a whole news trading questions, and I give you a whole economic calendar, We go through and we talk about, what we're looking at, what news event we're looking at, what the expectation is, what the expectation of movement is on the FX pair. Then I talk about how to do straddles and strangles and things like that. Occasionally I do premium collection on news. Like I did it last FO, actually the last two FOMC announcements. I actually did the spreads. I bought the lower and sold the upper because the premium was so high. And you can, if you want to check that out, you can go under like education, radio show archives. So just like basically just find the dates from the last couple announcements, or at least the last announcement. And you'll see me putting that on and how I determined what spreads to do it on. Okay, question. What chart interface are you using to chart information? I go over here to, if you're inside the website, go to Home and go to Start Here. And we got NinjaTrader is what I'm using. It's free to download. You can use whatever chart platform you want. Got links for getting free futures data, free Forex data. So just follow those links. And then I'm using my own setup on top of that. But as far as just getting like an actual chart, getting volume on a chart, and even if you're trading, like even though I trade futures, I actually include the volume. So I have like the 6E contract on there. And so that way I can actually look at the volume of that Forex pair. Like you're never going to be able to do that on MetaTrader. I guess maybe some brokers you might if they actually have the futures, but I want to have actual futures data. Even though I'm trading Euro-Dollar FX, I want to have actual like Euro-Dollar futures from the CME. I want to be able to look at their volume. And then how you getting your tickets to stay on top of the window. Okay, that's it's very helpful. Questions, trading question forum. Just go to structure. And questions about computers. Again, structure, computers. And then it has all these free tools. And one of them is Filebox Extender. It tells you basically it's how to pin browsers on top of Windows. So that way you can keep that ticket up and watching it. So you don't lose it in the background. Let's see here. So you got to keep watching the trade. I mean, you can't walk away from the trade. So premium collection, you are there. But what's the latest I'll be watching this trade? Like, what's the longest time I'd possibly be in this trade? When does it expire? Is a hint. It expires at 9 o'clock. Okay? So, as far as I only have a limited amount of time to trade, I can, current hour, next hour, and I may be in and out of the trade in 10 minutes. Okay? So, it could be a very, very fast trade. But the longest I'll be in it is till 9 o'clock, so I can really control my schedule. And then the next piece I want you to look at is, Samuel sort of bringing this up, is what I call the dark zone, okay? It's the last 2 minutes of binary options, and usually the market makers will pull quotes, okay? During that time, if I have a take profit order, and you don't have to do this, I'm not advising you of anything, okay? But I usually, get rid of my take profit orders, because sort of what's the point, okay? Just might as well get full profit at that point. They pull the quotes. Now, you can trade, but you're basically trading against other traders in those last couple minutes. And the biggest issue is, obviously, it's harder to get out of a trade in the last 2 minutes. So, personally, if it's close, okay, like if I'm within a few ticks, or if it's like a market close time, like at 3 o'clock on FX or 4:15 on indices and stuff, if it's close, I really prefer to be out of the trade before that 2 minutes, so like at 3 minutes before. Because you don't want to be in a trade and maybe you're up, and then all of a sudden the market just goes nuts in the last 2 minutes, and then you end up losing $80 because you couldn't even get out if you wanted to. Okay? So, I mean, I even know traders who, they always trade certain hours, and they actually have an alarm set up on their computer that, warns them, 4 minutes before the 2-minute bell type thing. And the 2 minute, and it's not even that it's I know, like, I mean, they can make it longer, but it's basically it's 2 minutes is the sort of the pattern. Okay, and that's really important for premium question because your risk is so high. Yeah, somebody put in an order for $9 and I got filled on there. Let's see. Yeah, we got filled. Okay, sweet. Um, so yeah, I don't even know how that happened, but I guess somebody just took it. Um, so we can go over to now the every once in a while. Yes, even I will say I don't know that happened. That's funny. So we go over here and we can look at, we don't have any. Oh, we do have that on there. Okay, I was like, what? That didn't make. Oh, I got my working order there. And then do I have my open? Okay, yeah, it didn't get filled yet. I was trying to figure out how in the world that thing got filled. That's all I could go to 9 or something. And yeah, we're at like 1450 by 8. And I got 10 of them. It looks like some of you are following along. So it's probably like 15 of you that got 8 in there also. As it's moving down. So if we hit that $8 price, then we'll be out of the trade. And as time goes by, remember how I said I would sort of look at the price ladder? So maybe every 15 minutes or so I might check and look at that and go, okay, what are we at right now? I actually could go maybe for 550 for about the same movement I was talking about earlier. So if I wanted to go in for a little bit more at the moment, I actually could. And it probably won't make any real difference on me getting filled on the trade. So, because times went by. So remember that was $8. It was like 3 and then 8, or I think it was 5 and then 8. So well now it's 550. So I could go over here to this trade and I could edit my working order. So I just go to the working order section, do the same thing on the scanner, click it, and I can change this if I want to 5.5, or I could leave it at 8. It just matters again how aggressive I want to be on my profit side. So I change that over 5.5. Okay? Or if I was in the scanner, then I'd actually see the position right there. Click that. And have that on there. Okay, so. Oh yeah, that's a good. The P&L close to expiration, like in those last 2 minutes, Jack brings up a good point. Like they'll just be weird prices because it's basically going to calculate your P&L on whatever's quoting. So if somebody has some weird random price in there, I mean, you could just see like you were up and all of a sudden you went down like $80. Okay, you're like, what's going on? And it's just random quotes, and it's not going to won't affect you unless you went in and took that price. But yeah, the last 2 minutes, the P&L really doesn't tell you anything because it's not the liquid market time. So every market has liquid hours, and the non-liquid time is the last 2 minutes of an expiration. So a couple good advanced questions coming in. So on the euro, could you buy back half at, say, 10 to sell? Yeah, and how would you do that? Okay, yeah, so let's go in here. And so we could change this to 5. Okay? So we're going to change our order right here just to 5 contracts. So we'll put like 5, say at 5.5. Okay? Hit amend order. Now we got 5 working for us. And then I just hit this, and now make sure you do adjust the size, So here I got maybe 5. And I could say, get me out if it hits 10. Or whatever. So yeah, I mean, there's a lot of different ways, obviously, you can combine it. So now I have, half of those that are going to get out 10. So I've removed some of the risk on half of them. And the other half, we're going to go for an extra, $5 times 5. That's another $25. Doesn't sound like a lot, but it adds up. So one thing to be aware of is on Nadex, now at 10 it's not really going to matter, but on Nadex right now the fees are capped at $9 per order, so that's 90 cents a contract. But if you do 5 contracts, it's $4.50. If you do 10 contracts, it's $9. If you do 50 contracts, it's $9. So if you had like 50 on and you split that up, then you'd be having like 2 orders of 25. Okay, so it'd be like $9 and $9 on the exit. But obviously, if you have that many contracts on, you're not worried about $9. So just something to keep in mind. So your fees go down as your size goes up. Once it's above 10, I mean it's basically dropping incrementally because it's going to stay at $9 flat. So the fee per contract, I guess you could say, in a sense, goes down because it's flat at $9. Okay, so another advanced question. This is good. Could risk management plan be risk rewarded 1-to-1? So you buy at 80, say you get out at 60. It could. What I would tell you on that, Samuel, is definitely to check out our site about some questions about risk management, but also you need to test that because it could easily just go from 80 to 60 in a few ticks, and you might knock yourself out a lot. Okay? So I really like to base my trading. Binaries are very volatile, especially the closer you get to expiration. I really highly suggest you base your trading on the chart versus simply the binary price. So now, as far as like taking profit, yeah, that's like the 43.57 or the 92, stuff like that. But as far as like where I'm going to get in or a stop, loss per se, then I really want to base it on the chart itself. And like trail my stop down here. So just keep trailing it, because the price could so easily fluctuate. Somebody could take out the book, and then all of a sudden the price fluctuates up to 60. I'd say the better method would be simply to, pick what price you're going to trail it on to be consistent. And then you also need to look at that and go, how does that impact in reality? Do it on demo, of course, but how does that impact my results? Because the closer your stops are, the more often you're going to get stopped out. The less you're going to lose, but the more often, or the less amount of money you're going to lose, but the more often you're going to lose because your stop's closer. So you got to balance that out, because you want to maintain a balance of profitability and probability and make sure that they're in the correct sequence. So meaning whatever my risk is, okay, that my loss percent is greater. Because my profit percent is, let's see, if my risk is, say, $80, my profit percent needs to be, my probability percent needs to be greater than 80. So if I'm going to be risking $80, I need to be profitable on 80% of my trades to even be break even. If I'm risking $30, okay, on a trade, to make 20 or whatever, then I got to be profitable basically on, less, like it'd be basically 40% of my trades, no, 60% of my trades, sorry, to be break even. So that's a whole long conversation on risk management, but just make sure that your numbers work out, because sometimes just tightening your stop doesn't necessarily increase your results. Yep, you could leave it and see if it hits your take profit. Yep. So according to the Nadex Twitter feed, the indices are poised for a significant bounce. Well, they're poised to run and they're poised to fall. So, the market should have been falling for a long time, and now that it fell, everybody's going to say now it's ready to bounce. As far as a strategy, I mean, if you just want to take a wild hair, throw something out there, I mean, yeah, that's an out of the money binary. But you're going to out of the money today. Is it going to bounce today? Is it going to bounce tomorrow? Is it going to bounce this week? You're going to do a weekly binary. What binary contract are you going to use? How far do you think it's going to bounce? So you got to look at all your pieces together on that. But I mean, I prefer. That's why I like day trading, because I like just following what's happening, and versus trying to form an opinion on it, which I think is one of the most dangerous things that happens to us as traders. And just let's see here. Let's just look at daily bars on the S&P. Open this up. We'll look at it. And then let me clean this up. Add volume on. So you can even see a volume bar. It's hard to on the S&P futures because there's so much. I mean, right now I'm definitely very short, but let's see here. Like basically, in my trading, I need some sort of confirmation because my opinion has got me in a lot more trouble than anything. Let's see here. We had a down day right there with a very high volume bar. Let me put on the continuous contract. That's good. Some live market analysis, right? There we go. And so right there's our high volume bars over and over again on the S&P. The last one was right down here. So my target for what I call a magnet trade, I teach this a lot, we talk about it a lot, was for the market to come down to this price. And we pretty much are there. We're within, 3 points in the last couple of days of hitting that. So you'll have sell-off exhaustion, and the market's obviously going to oscillate whenever there's a big drop or whatever. But that would have been, my target price would have been right around a low of 1760.75. So if it goes back up, where is it going to go? Well, I have a problem because I don't have any high volume bars above the market. All of my volume bars, like there's the next high volume bar, we'll get that. That's basically the same price, same volume level, right there. We go back here, and now we're dropping down a little bit more. So now I'm looking, got to move down to 1640. So the real test is, we've had high volume, we're at these levels. If we break below 1760.75 on the day, break and close below with high volume, like with even higher than the average volume here of about 230,000 contracts. If we can break that with that kind of strength or more, then we ought to continue down. And so that's sort of what's happening right now. There's this big battle, and market's trying to figure out which direction it's going to go. You can go over. You can also sort of line it up. Sometimes the Russell can even be more telling. We'll see if it helps because it has less contracts being traded. So we'll see if there's anything there. See, it still hasn't even made its big move back. I mean, we got right over here from that volume right here, this volume right here. We go in. So it's still looking to get down to 1100 on the Russell. We haven't hit that yet. We got some pretty big volume bars, and it's just bouncing in between these bars right now. Market's really trying to figure out what it's going to do next. See, look at the Dow. I'm just trying to see if we see any of them. Right now they're all saying short, 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 and none of them have fully got their price. Let's see, we had a big price right there. We didn't get a retracement on it, though. So it basically went up, came right back down to it. Previous high volume, bar, down bar right there. So, but it already came back down to that one. So previous high volume bar that it hasn't, where we retraced to, pulled back right here. Well, look at that. So right there, I mean, this is the biggest volume bar we've had since the current down moves. So I get rid of these prices, which is hitting. Then on the high volume bar right there on the Dow, we see that the target would have been, because it was a down day, high of 15 or low. Sorry, close low of 15,540. And where do we go today? We hit the low was 15,552. And we're targeting a low of, I just want to make sure I'm right, a low of 15,540. So, I mean, within like 12 ticks. So, we're literally at the point of, is it going to, it's poised for a bounce or it's poised to fall hard. So, how would you take advantage of that on Nadex? If you were expecting that decision to be made this week, which there are some big things happening. We got NFP happening on Friday. We have the pound interest rate, the euro interest rate, and press conference announcements coming out on Thursday. So if you're expecting, a big, those are market moving events. We even had the ADP NFP coming out on Wednesday. So nothing major, no big news coming out tomorrow. But then you could go and you could look at, basically what you would expect on a deviation move between now and Friday. And let's see, the easiest way to do that. So this is for the bonus for those who stayed on longer, right? Easiest way to do that I found, just looking at Nadex pricing. If I go to weeklies, say on the S&P, on expectation of movement, is going to be, let's see here, $17.85 to about $17.15 is the range that's built into the pricing. Sorry, 8. Yeah, so that just sounds weird to, because I'm looking at the Dow. I was like, wait a minute. So let me switch this back over to the S&P. So like I said, you'd be looking at it somewhere around 17.15, and as high as about 17. Like I said, actually a little bit lower than that. Let's see, 25. It's about 17.66. So let's see. Oh, we're not seeing the live price here. So let me pull up the live future. There we go. Yeah. There we go. That's actually a little more helpful for our study. So we broke through. Right. Thank you. When you do a continuous contract with IQ feed, but you have CQG in front of it, then it's not going to show you the live. But I want to see all the volume bars historically. So you go back, pull those volume bars, and then flip back over. So that reveals a whole new world of information. And so we can see we just broke this last, and we have this bar right here. But we just broke this with insanely massive volume. So, I mean, I would actually be more inclined to say game over. But where are we going to go to? Okay, if you want to look at market pricing, I'd be looking at bonuses are the best. I'd be looking at about for a big move. Okay, if you want to go for like what's the price being built in at this moment, then you'd be looking at about 1706. I'm looking at binary pricing. I'm looking for the ones right around $20-25. Okay. So if we go down here to 1706, I'm so glad I flipped that over. I could change the entire thing. And then going up to about 1766. So yeah, here we go, 1766. So basically this range right here is sort of the built-in pricing for the week. And so you could go in and you could buy like a $20 and sell a $20. The problem is by the time you get there, if you get out, you're break even. So it's very hard to do weekly contracts on that because it would have to really move further and you have to get cheaper. It's hard to. That's why when I do certain news trades, you have to expect a fundamental shock. It has to be greater than the expected move for you to be able to do like a strangle or straddle and be profitable in the trade. But if you thought it was just going to go up, okay, then you could just do one side. So if you thought the market's really poised for a bounce, then I'd be targeting that price right there. I mean, look at all the lows. Hit 3 days in a row, okay? And then that also is built into the market pricing. Market falls down. Could it go back up? If we get like a decent NFP, and depending upon how FX, euro dollar, pound dollar affects the dollar, which affects the market, then yeah, it could easily drive it right back up there and give us that price. I could show you an example today. We're getting off topic a little bit, but hopefully y'all are enjoying. We pretty much covered premium collection. So here over on silver, is a trade that we did today, and the market was up, and I had let me throw this on here. It's called a volume spike, okay? And where is it? Oh, where's the wrong one? The new one that's coming out. Here we go. Okay, so like right up here, you can see there's basically all these volume spikes. And what that means is the volume is double the bars on both sides. And then I was also looking at the deviation level, so at the statistical expectation of movement. And the market at that point was basically up 1.5 deviations. Touched it, volume spike, turnaround. Okay, and I did 2 trades on this. One trade was I went and I bought the 1930 strike, which also happened to be the low of that high volume bar. Okay, so I sold for it to come back down. Then the market expires. What is it? 125 on silver. The daily expiration's about like right there. It's not a very visible line. Let's see. Try to make it a little more easy to see. There we go. Make it a little wider. Okay, so market expired right there. So what I did was, when I came here, I got this volume spike. I sold for about, I want to say it was like 82. And I bought back at 57, okay, targeting that 1930 strike. And then when it hit the 1930 strike, I also bought again. So I bought, if I sold 5, I bought 10 type thing, okay? Expecting it to bounce right off of that. And it's basically just using that massive volume spike. Because see how it didn't break through the price? This is what I want to show you. How it didn't break through the price with volume. Okay? It hit the price and then bounced off. I mean, that's a great setup. Whereas, if we go back over to that S&P daily chart, it broke through that high volume bar with high volume. So that gives you a little insight to how I use volume and how I learn to use it for my mentors and stuff. And I'll use volume to help me. I have volume spikes, but I also look at big volume bars to give me an idea on where the market's heading, what strike to look at, where to take profit. I think on the Bull Bear Binary Hour, I do, like I said, I do the radio show every week, and I do a co-host one with Tommy O'Brien. And he was picking a level, and a trader called me up. They're like, "How did he pick this level?" And it was actually based exactly on the high volume bars. So we actually use that to pick our exit plan. And let's see here. If I go back over, I'll show you that one. Just trying to, I want to give you a couple tips on picking some of this stuff. And this also helps for, you can do premium collection right there. That can actually be a method where you're like, okay, hit the volume bar, boom, bounce, no volume, go the other direction. So, I use MVP because it's just simple and easy and I follow it. But there's a lot of ways you can do it. And I want to challenge you to, think outside the box. It takes a little bit because I got a lot of different charts open at one time. See, I got the 5-minute up. We can maybe switch this to 10. Let's see. But yeah, based on my experience, I would not expect the market to rally. But I guess the way I'd put it is, no matter what I expect, I don't trade my I'll trade the expectations, not my expectations. Does that make sense? So expectations of movement I'll trade, but I don't want to trade my expectations because, well, they're just wrong. So, and you gotta, the sooner you admit that as a trader, the better off you're going to be. Okay, so let's see here. Here's a high volume. Right there, okay. There's a high volume right there. Market basically came up off that, came right back down to it. So see, that was a good, trade. Over here, we had a really high volume bar right here. So you could actually say that this price level right there. So the S&P is going to bounce. The closest for an intraday trade would be, I would expect it to come back and hit this price. This is 150,000, 160,000 contracts. So I would expect it to come back up and hit before doing its final descent. Okay, I would expect it to come back up and hit 1757. So very high probability. So because it came down, it didn't break it with massive volume. We did get some pretty big volume right there. We also basically, you could say, we set another high volume bar down here. right there. So it could easily, I mean, watch tomorrow. Watch it go up to 1757 and come back down to 1733. So we'll see what happens, right? But either way, trade the chart. Don't trade the opinion. As far as the trade we did on Friday on the radio show, Tommy was looking at this high volume bar right at the end of the day, 100,000 contracts. And then he was looking at this level right here. And this was in the morning. Shows from 9 to 10 on Friday mornings. And he saw it coming down, had this volume, but wasn't breaking the lows at all with any kind of conviction. And we had a pretty big volume bar, and it tried to come back down and touch it, but had lower volume, and it wasn't breaking the lows right here. He's like, all right, let's go. We're going up. And he targeted, that, which happened to also be the settlement price, targeted that level. And it ran on up there, and obviously worked out well. But all that was, like, mine was settlement, which was a lot easier. But his was the volume bar, and it's great when they both come together. All right, well, that was a bonus piece, not a normal piece, but showed you some volume stuff along with it, and you can use that for, obviously, a lot of analysis. But I look at, like, daily bars and 10-minute bars for finding high probability magnet prices. If I think the market's going to retrace or go somewhere, that's usually what I'm going to look at to find where I believe it's going to go. All right. Any more questions? I think that ought to cover it. Cool. All right. Well, if y'all have any questions, definitely go over, get your Nadex account, sign up for that if you don't have it, get your demo, get your live. Here, we'll just close this trade out. It's at $8 right now. Okay. Well, actually, we already closed out at 10. So close out the other half. Book our remaining $70 in profit. Okay. Just to end the trade on the webinar there. There we go. All right. Trade worked. Sweet. There you go. So we're moving down. We're still going. But at the same time, manage your risk. And if you don't want that aggressive, like I said, there's high aggressive, there's aggressive, and there's conservative, or high aggressive, moderate conservative, however you want to put it. But just know what you're going to do before you do it. And what I mean by that is do not, choose your model. Like, what risk management plan are you going to use before you get in? Because once you're in, you're always going to go the most aggressive. And you don't want to do that. So, I'm watching, and my rule is I actually do go with the aggressive personally. Now, I have more risk tolerance than most people do. But I'm going to look at the confirmation. If I would have saw, earlier, 2 and 3 flipping. 1 started to flip but never broke out. 2 started to flip but never broke out. 3 never flipped. If I would have saw those flipping, even 4 started to flip but never broke out. If I would have saw all these flipping, I would have been moving my stop or getting out of the trade. Okay? So I just really want y'all to have the risk management down, because that's everything in trading. Until you get that down, nothing else will work. So, all right, I will see y'all Thursday. Yeah, hop on the webinar. You can hop on our Thursday webinars. We do all sorts of cool bonus stuff. So, and that's it. All right, well, y'all have a great day, a great evening, and I'll see a bunch of you Thursday. So, bye. Good night.